Fantastic. Welcome to our workshop number 10. I am so pleased that you have stayed with us during the journey, and I hope it's been a good one. What I thought to do today, I would like to put everything that we've learned, put together, have a review of where we started and the things that we have learned and the things that we need to do or we need to actually learn the process, but more importantly, I'm hoping you learn the things that not to do. And I think sometimes a lot, we learn more on things that we shouldn't do, and also the things that we don't know. And that's something that we will this I hope it's you've learned from that experience. So uh, again, I call it putting it all together, and basically we will use that journey, and hopefully, again, it will be a good one. All right, so here we are. So we started our workshops in the first week, and the title was "It's all about investment analysis." So we looked at my philosophy of how I look at when I approach my investing and trading. And many of you are familiar with the fundamental analysis, and there's a lot of emphasis on that. But a lot of times, there's not much talk about sentiment, seasonality, cycles. And believe it or not, they do affect our behavior on making the decisions. We can be a great data collector, we can be a very analytical and find something, but that's only a piece of puzzle. And then that brings us to the timing. And that's where a lot of times that long-term investors, they don't have to worry much about this. Things like Warren Buffett or John Templeton or late John Templeton, John Bogle, they didn't have to because they're looking at a very long time horizon. But generally, we are not in that environment. We are looking for making money in a short run or intermediate run. So technical analysis plays a role. On top of that, especially when it comes to shorter term trading, your mindset plays a huge role. So we introduce all of these, and I hope in the next following weeks we have become more comfortable on these again these issues. So what what I did share during all these weeks, I think you have received maybe 42 uh, additional videos and lessons. I know some of you are very tired of my emails and looking at me, but I thought they were important. So, for instance, we've talked about seasonality around the events. For instance, like for instance, 4th of July coming, Christmas, Thanksgiving. Uh, there is seasonality around the Fed, the FOMC meeting. How about CPI numbers? How about the like next week we have the employment numbers? All of these play a role, and then we talked about cycles. We have presidential cycles. We have cycles in earnings. We have cycles in commodities such as again agriculture. And then we looked at some of unknown cycles that I hope that was helpful. We looked at the short term, the kitchen four year to all the way. We have Kendrakov 60 to 72 year cycles. And, they do within a year or two, they give you heads up. The whole idea is I want to give you the tools that you can actually cumulatively use it to become obviously more successful investor and traders. Also, I shared with you with market sentiment. As you know, when I do my market analysis, I go over these and talk about how the psychology of the market is looking, and how the mentality of masses and also advisors. Um, then I also talked about ETFs, exchange traded funds, and we also had a reference guide for that. So basically putting all these together, I'm hoping I have given you enough tools to become more astute investor and again, a trader. So I want to take a journey and go back to April 4th. I hope you're um, enjoying or at least looking at some of the I've been sending you to videos of my market analysis, which is for my members. We have subscription models, so they receive it, but I've decided to share it with you. I'm hoping with all these that we've done, with all the review of these workshops, you feel more comfortable looking at the market analysis. Now, this was April 4th, which is April 5th when I sent the video. This is April 4th closing. And at that time, I shared with you what was the American Association of Individual Investors, the members are feeling about the stock market. And and the idea is with this is what they think in next 6 months, are the markets going to be up, down, or neutral? So we put them on hold. The average has been historical average for the bears, people think it's going to be down, is 31%. On April 2nd, actually, the thought was, this is, remember, this is the middle of the tariffs and everything, it was 61.9, more than almost, it's almost double what the historical averages have been. And look at the bulls. The positivity was at 37 and a half. And what was the bulls on April 2nd? It was 21.8. So what we see is the bears, this was the highest we had been in the past 52 weeks. So let's look at something else. We look at the spread, the difference between the bears and bulls, and you can see we were, in the 52 weeks low, which was a negative 40%. The other criteria we use, I used three, but about five or six, but I shared the three of them. It was the CNN Fear and Greed, which looks at the internal. So it's uh, the the AAI is a survey, which I'm a member of, and they call me, once a week. They send me an email, say, "What do you think?" Not that I answer, but that's how they gather their information. The Fear and Greed Index is more internal. It looks at what is happening as far as like the momentum, advanced decline line, the put call ratios. So it's more of a quantitative data driven. And where were we? This is the lowest it had been in a long time. And as you can see, it was April 4th. It was at 4. It was extreme fear. So when I look at things, I look at the extremes. And this was 4. So let's look at where we were on the sentiment, and let's the following week. So because remember, I'm doing it on Saturday for the following week. So it was giving us a heads up. Just remember, there's a lot of fear in the markets. So there is this rubber band has been really stretched. And this is what happened. As you can see, I've combined the other thing is, we will talk about the technical, you can see on Fibonacci, where did we go? These were using technical analysis. On that week, we did hit our again, in the situation, the support zone. It's a long term. I'm going back to 2020 and basically the COVID era, and we did extend that, and uh, we hit the 61.8, which is a very important in Fibonacci. That's probably the most important number, and we bounced back. So we had the sentiment. Now, on a short run, as you can see again, we looked at and we hit the 127.2 as a support. So when you combine those, combine what it is with the sentiment, you look at again, the charts, we look at the technical analysis, this became our bottom. And this is how you could have had advantage combining here, and now you're combining sentiment and technical analysis. So you are not focusing on the news and what is President Trump is doing, what is Canada is doing, what is China going to do. This is the reality. This is where the markets are making that decision for you. So if you recall, we have a portfolio, for instance, of on April 8th, that's where I got started buying. We have you've been following it with me, some of the stocks that we bought. So that was one of the reasons we got into the positions while everybody's talking about, the bottom's falling, everybody's negative, and here we are. So I'm fast forwarding. This is what April 7th, April 8th. This is when I got into the markets, and this is where we are now. So again, what you see is the combination of things work rather than, unless you say, well, beginning of the year, a lot of people say, well, we are long-term investor. We're going to close our eyes, which would have been pretty good because look, what we went back is like back to where we were in March. So yes, that would have worked and you didn't have to worry. But you know what? Human psychology is different. Emotions are different. And we make the decisions at the wrong time. The fear creeps in. And we talked about cycles. Cycles, there's emotional cycle. That fear and greed are very powerful forces. So that's when you see the people just throw the towel and they're done and they get out of the market right at the wrong time. So again, if you are closing your eyes and say, "Well, it's my 401k, my retirement plan, I don't have to worry about it," that's fine. But also you can see there are opportunities created that you can take advantage of. Our second workshop, we looked at the best classic chart patterns. And of course, I shared with you with my technical analysis book. We looked at what types of charts they are. And some of my favorites are candlesticks, for instance. Now we have the Western, which is the high, low, uh, and then the open, close bars. But I really like candlesticks, so we had video on candlesticks. One of my favorite um, uh, usage of the classical technical analysis using channels, especially in options trading, and how I can apply channels in my day trading. So we've done that. The third week, we looked at the more uh, advanced technical tools, market using the technical analysis, and we looked at the moving averages, which, again, it's a self-fulfilling prophecy. I know a lot of like fundamental analysts, they don't really pay attention, but they do. Believe it or not, a lot of institutions, they have programs written, algorithmic programs are just purely based on moving averages. And for instance, if you're a very short-term moving average, they use 8-day exponential moving average, or 20 and 21 is very favorite. 50 when it comes for more longer term, and 200 more of the institution mutual funds and fund managers, they use that 200 is critical. So moving averages are important. Bollinger Bands, especially if you're more into mathematics. It's about the patterns of the behavior as far as a normalcy. We look at standard deviation and are we going away from that? So that's important. And I've introduced to all the things that I use during my market analysis that I send every weekend. So you can be comfortable with that. You don't have to be bombarded by 300 different indicators. Everybody has their own, again, plans and they follow, and there's no wrong or right answer. These are the things that I use and I've shared it with you. And it has worked for me in the past, in my trading career, over 37 years or so. My investing is over 40 years. So this is especially, again, if you're more of a shorter term, it works very well. Squeeze is one of the uh, underrated uh, strategies that it's very, very helpful, especially again, if you do options strategies. We talked about oscillators and momentum indicators, and I like the MACD and the stochastics. I combine it with other things. I love Ichimoku clouds. You see how I apply it in my analysis. Fibonacci is very much, again, mathematical oriented. A lot of Forex traders, for instance, they love Fibonacci. So you can apply that in any markets. And then we talked about modern technical analysis and one of other, again, hidden gems is Hakinashi, and how I can combine MACD with Hakinashi and come up with some buying or selling indicators. Then we went to the futures, another thing that is kind of a mystery for a lot of people. And with that, we talked about commodities. Commodities are very attractive investment tool, and this is where you can use exchange traded funds if you don't want to use futures. And in commodities, the beauty of commodities is you only got maybe 20 major commodities are very much supply and demand oriented. The factors are given. So sometimes we are very much attracted to stocks because they are the topic, which is there are one of the actually smaller markets out there. I mean, you think about bonds and Forex, for instance, and the futures and options. They're not as large, but we love to analyze stocks just because that's a lot of news is around that. But also, you have to remember there's like 40,000 equities out there. How can you analyze that? Commodities, on the other hand, is a big picture. And if you can manage to understand it, such as, let's say, gold and crude oil, you can have a pretty good career. And agriculture. We also talked about breakfast commodities, whether it's coffee or we looked at cocoa. And these are the things that, even in commodities, we had talked about wheat and corn and also uranium. I would definitely encourage you to learn more about uranium. It's the way of future. We can see what is happening with the energy side of things. So we introduced that. We talked about livestock. Again, that's another mystery. Many people are not familiar with it. So I want to introduce to that. I think the currency market, the dollar is the first place I would go for analyzing the markets. Everything is around. Again, we talk about interest rates, inflation, the dollar, which is that's when the central banks play a big role. So we talked about Forex and currency investing, and then I introduced you some of my trading strategies. The last but not least is one of my favorite free um, websites. We had a video on how to master Finviz, and Finviz, the first thing you do if you wake up at whatever time it is before the markets open, just go to their futures um, screen and just see how the markets are behaving. Green, green, dark red, light green. So it gives you a good story of what's going to happen. Um, One of my favorite subjects, the tools that I use is understanding options. And we talked about what are options. And then I introduced you to some of the strategies. So first of all, 20 reasons why to invest in options. Covered call, one of the best ways to create income. What are the option Greeks? And like, for instance, we talked about straddle. How about buying a stock at a discount by selling puts, for instance, and making income? How can we take advantage of this unusual option activity for actually finding candidates for buying stocks? Forget about just the options, but options are very, very powerful tool for the direction of the markets. S&P 500 cash, which is SPX, and SPY are the, the most liquid and one of the largest. There's like 20% of the option markets is just on SPX and SPY. By looking at that, you can see what the option market traders are thinking. And usually there are more professionals, so they give you a good hint. The other thing about unusual option activity, we look at the volume. Insiders, as you know, when somebody wants to, from the inside the company management, anytime they buy something, they have to report it immediately. But with options, sometimes not talking about stock options, that's a, bonus. Other thing. No, in an open market, usually they don't have to do anything. So sometimes these institutions, they are doing things that they don't really have to report. So by you seeing what they're thinking, um, that gives you a heads up. Also, I introduced some of my best option strategies, and then the earnings season are here. Every week you have some kind of earnings, which I share again in my trade of the week. I give you heads up. What are the upcoming earnings? So that gives you another tool. And there are quite few. And these are just the tip of the iceberg. But again, we only had 10 weeks. So I wanted to share what I, without bombarding you too much, which I think I have, but just giving you a little taste of what's out there. Um, the most hidden things, especially when it comes to trading, is the lack of discipline and also clarity. You go back to COVID era, everybody wanted to be a millionaire. They're sitting at home, there's no work or school. And everybody talking about, oh, I'm buying call options in these meme stocks. I made 1 million, 2 million, I got Bitcoin. But there is no plan. If you want to be successful investor and trader, you have to have a business plan. And that's why that whole class was. Approach this is not a hobby, especially if you're using your own money. This is your hard-earned money. Some of you have worked years for this. So be serious. It's not gambling. And that's what the approach is, unfortunately. It becomes like a 50-50. I'm hoping we can give you a little advantage by understanding all these. So we had, like, for instance, I just used my own example. What is the day in the life of a trader? A sample of, my business plan and basically, which I didn't write it there, but yeah, we had a sample, for instance. Um, Also, especially if you're a long-term investor, most people, again, they just go and buy, they put 10% here, 5% there, 15%, and they think they got a portfolio. Now, you have to understand how to construct a portfolio, especially for a longer term. If you have a 10-year plan, a retirement plan, you have to learn. There are techniques for that. So, uh, one of the most important things are everybody's excited to get into their positions. Nobody really has any rules of when do I get out? When do I get nervous? Or when do I get, as far as uh, taking profits, when do I do that? Is there any rules? Do I evaluate my portfolio every quarter? Do I do it every year? And so we introduced that. So I want to use one example so you can see my strategy so we can understand. And this is on the hand side, but like Palantir right now, it's a big, obviously AI talk of the town. But you go back, and we go back to February of 2022. Well, I purchased this about $12, right? So I bought only 500 shares, but I had a discipline. I always have targets. And for me, the bottom line is yes, it is about long-term investing, but also I like to sleep well at nights. And my job is to invest to make money. Sometimes yeah, we can wait 20 years, but you can also have companies like Kodak or Sears, which they're not in existence anymore. And you bought them, let's say people bought them in 1960s and 70s, and then they wake up in 2000s and 2010s and they see, oh, the company doesn't exist. Well, I'm a long-term investor. So we have to differentiate that. And that's what sometimes the indexes, and that's what John Bogle from Vanguard Philosophy was buying um, a large index exchange traded fund, for instance, and use diversification in that than individual stocks. You could also have like Berkshire Hathaway, Warren Buffett's fund. That's almost like the market itself. So, but in this case, this is what I did. And as you can see, I had my discipline. I got out of these, and now I only have 100 shares. Now, on a hindsight, you say, excuse the language, what an idiot. He bought it at 12, it's $130 today. That's over 1,000% return on the money. I look at it, yes, oh, it's great to look at the left side, but nobody knows the right side of the movement. I didn't know what's going to happen. I just had a discipline. I knew I had a valuation for over a year, so I stayed with it. And after that, like for instance, I got out of here when they joined with the target in September, like they got in part of the S&P 500, and obviously it went up. And The reason I say that, I never have regrets. So basically, now that I have like 100 shares left, I can keep this for infinity. Um, if it goes to zero, I still made money. If it goes to 500, I still have position. So that's part of the money management. One of the tools, and I think I have shared it, this is something you can apply if you like to know. Let's say you had cryptocurrency, for instance, or you had Tesla many years ago. One of the techniques that I use is I have, what is my objective? Do I want to make 25% or would I be happy in 50%? So I have those targets and that's my desire. So if I make 25%, just one strategy is I, or in my case, it's like 50%, I get out of one third of my position. So if I have, let's say, 100, I sell 33 shares. Now I have 67. Now, then I put another target and I say, well, if I made 100%, I'll sell the remaining one third. So if it's 67, let's say I sell now 22 if I made 100%. Then I put 200%. So 67 minus 22, now we have 45 left. If I made 200%, I sell one third of that, which is 15 shares. So what happens? I'm making 100. I mean, if you said to someone, you doubled your money in 10 years, they will be very happy. So here I am doing it and I'm never out of my position. So again, like if you did that in Bitcoin when it was 10 years ago or 5 years ago, basically you could use this. So you will get out with the turns. Of course, on a hindsight, you would say, oh, I wish I would have held it for long term, but we never know. And that's what investing is. No, I don't care how, um, even, James Simons from Renaissance, which was absolute mathematical genius with the hidden secrets, and he was making 30%. He didn't stay in his positions for 20 years like Warren Buffett, even he gets in and out too. These are people, I mean, Warren Buffett has 300 or 400 billion dollars in cash. He can buy the company. We don't as individual investors. So our goal is to make money. I just want to share with you. So this is like just the reality. So on February 28, 2022, that's what I bought at 1205, 500 shares. And then this is how right after the joining the S&P, usually there is a knee-jerk reaction, but in this case it continued. So I sold 100, then we sold again and sold again. And then this was right before the earning, I sold again. So you see, we had almost 200%, 256%, 436%, 561% return on our investments in 2.5 years or 3 years. So today is 1,000%. Well, when you look at this, oh, we made 17,500 so far, and then I have another 14 or 13,000. That's 30. We could have made 60,000. Do I have regrets? No. You have to have discipline and stick with it. You can be flexible, but these are all the things that you should do it before you enter your position. Another, for instance, position I had was at those times we didn't have ETFs like IBIT and BITO, and this was before like GBTC was the only Bitcoin. It was a trust ETF. It was high spread on the premium, and we can see I bought it in January. As you can see, I sold it, made my 25% right after that it dropped. Then I sold another, and of course it dropped big time. But because I had sold here, I had less, again, attachment to my position because I had taken some profits and now here we are sold some here and then I still have a little bit of position. So I'm okay. Here we go. I mean, it could be a long term. Another example I should give you is AMC, which is right on one of those meme stocks in December of the, um, actually I got it in January of 2021. I bought call options right in December of 20, right before Christmas on AMC. They worked out perfectly. But look what happened again. I'm taking profits. They had a uh, reverse split. So, I mean, look where they were. I mean, so here at the times that I sold, this was actually before the market opening, and I still have like I think one share left. I don't know why. It feels interesting to have AMC, I guess. But that's look here. It allowed me to take advantage of the again the momentum it had. So I made pretty good returns on those. And now this was just that year, and today this is where they are. They're right here, which is lower than when I started. So that's about managing your position. This is a little better when they were before this split. Um, the most important thing, I talk about mindset, and we emphasize a lot on this. If you don't have the right belief system, if you don't not have the master of your own self, it's going to be very difficult, especially when it comes to trading. You are really battling against yourself. You have these self-talks and you have all these things coming up from back and forth from your past. So that was probably one of the most important classes we've had. And I shared like the 7 secrets of greatest investors and traders. And then we also talked about how to value stocks and be a stock analyst. That talks about fundamental analysis. And that's very, very important. That's the engine of your investing, and your basically allows you to understand uh, where you are and where you want to go. And that's what the valuation becomes a very, very important part of your, especially as a long-term investor. So we shared that. I also shared some videos all about fundamental analysis. I also want to talk about, again, some of our strategies. One of them is insider buying. Not more so insider selling doesn't give us as much information like buying. How about these Wall Street analysts? They come and do something. So we had to talk about analyzing Wall Street analysts and how to analyze airline industry. And one of the samples we have a lot in our works, our library. We have how to analyze mining or semiconductors, leisure and travels. And you get a big library of how to analyze industries, which is important. We start analyzing the industry, and then move to we start with sectors, industry, and then the stock itself. And also last week, I shared the stock of the month. We have in our group, every month we come up with and meet and come up with a couple of stocks. So I wanted to use that example to share with you how we look at from the valuation, what we're looking at from fundamental, and also when we look at the valuation, but when to get in, and that's with the technical side. So I hope you had a chance to visit or watch that video, because I think it's important to see how like I approach or my team approaches. Just it goes back to end of July, for instance. End of July, our pick was like Twilio, right? So you can see this is where it was. And we put a valuation of, at that time was like $57. We put a valuation of 120, for instance. And guess where it went? 150, and where it is, it's at 117 now. But it's the timing of it also. You can see, well, it took a while to get that confirmation. Finally, in September, we had a breakout, or at least from the 20 and 50. So that would have given you a much better timing. You see, there was this consolidation back and forth. So that would have given you a better entry. You see, the MACD was pretty flat. So this would have given you a good heads up, combining fundamental and technical. We also talked about Lululemon. Again, that was in July. If you go look at the technical, we still did not have the confirmation, and it did obviously go even lower. And finally, you could see what happened. And basically, this is where the Lululemon went, and this is where it's now. And that comes to your money management side. Well, if I made 50%, if I made 100%, is this a good time to exit part of my position? And that's precisely what I was talking about. This is using Hakinashi. For instance, we are combining MACD. So when the Hakinashi turns with the candles, the 2 reds in a row, one red is the heads up, and MACD crosses, That's generally is a sell signal. In this situation, you see we went to our 20-day moving average and then bounced back, but then that was like a double top here. And again, the MACD was giving you heads up. The Haki was giving you heads up. You could be late and you could sell right here. You could sell here in the cross, as we call it, death cross. Even here would have been a good time. So this is from the technical exits. You could have your money management exits. So there's a lot of ways you can use the tools. Um, Another thing I've discussed it with you, April 8th, we ended up buying, this is a software cloud uh, small stock like Domo. And what was my reason? This is, we bought at 750 actually. This is 3 weeks later and still not moved. But it was this, the insider buying. And I've shared this before. I noticed that the founder and CEO, for instance, on April 4th, decided to buy at 650, and it was pretty good chunk. This is more than double or more than what he had before, and he had not had any activities prior to that. So, and then I ignored the directors because the directors, they can have a systematic buying. But also you can see when the CFO had bought some in September of previous year, and he had bought some. Usually CFOs are good indicators. And you see after he, or in this case, uh, Joel, bought, what happened. So that was our indicator. And of course, they had a good earnings, and this is where they are today. So they're up, as you can see, they're up almost for the months, they're over 70% up. So these are some of the techniques that we use. So my goal was, again, to give you a path to become, as I mentioned, more all-around successful investor and trader. Again, we squeezed, I think, a lot in 10 weeks, and I'm really appreciative of your attention. And basically, the goal was to let you know that sometimes we learn things based on theories. I'm hoping, every week I was sharing something uh, a real trade, whether it was in futures, my day trading, whether it was options, like my gold options, whether it was on stocks, like the insider trading and analysis. So technical tools. I hope you've benefited from this. I'm very grateful for our journey, and then I hope it has been helpful. So with that in mind, I'm gonna go ahead and stop the recording, and then I open the recording and we can actually share some of our thoughts and basically any comments that you have. So let me do that.